I'll show you how to get set up on KuCoin and make your first crypto trades on the platform. So set up an account, just an email address, and then you can get into the account right here. And then go to your dashboard, go down to account security, and then turn on passkeys. This uses the biometrics on your device. So if you have an iPhone or an Android device, you're gonna have your biometrics there. You can turn this passkeys on. So whenever you log in or whenever you do something important like withdrawing, it's just going to pop up with your passkey. You just do Face ID or Touch ID and it logs you in, and then you can do the important thing. It's much more secure, so definitely recommend turning this on. You can set up Google Authenticator if you want, which is the old way of doing things. It's a 6-digit passcode. You need to put that in whenever you do something important. Passkeys is way easier and it's your biometrics. So go ahead and turn that on. Now, what we also need to do is ID verification. All top exchanges need you to do ID these days. So that's passport or ID card wherever you're resident, and you take a photo of it and then scan your face. Now you can do it online. You can do it on the app as well if you have access to it. So if you want to use the app, take a photo, scan your face, and then that's going to let you trade, deposit, and withdraw from the platform. KuCoin will usually run some sort of bonus if you're a new user. They call it limited time here, but to be honest, I've seen a version of this running pretty much consistently all the time that KuCoin has been around. You know, they run it for 30 days and then refresh it for 30 days. I'll leave the link below. You can see what's running at the time that you're watching this. It may change over time, but essentially, if you go in, you make a deposit, trade a certain amount, etc., they're going to give you some sort of bonus in your account. So certainly if you are a new user, make sure you take advantage of it. I'll leave the link below. You can see what's available when you're watching this. Now I'll show you the trading and other fees that you may pay on KuCoin. Trading fees are 0.1%, 10 basis points. That is competitive. If you look at the other platforms like Binance, Bybit, OKX, they'll usually start at around 10 basis points. Depending on your region, some regions may be more expensive. 10 basis points is very competitive. Now they give discounts with KCS token as well, which means go ahead and buy like $10, $15 worth of KCS, toggle on pay fees with KCS, you get 20% discount, taking you down to 0.08% in trading fees, which is very, very competitive, amongst the lowest. KCS is a risk asset, so you buy some in your account, it could go up or down in value. And so you may get a higher discount or a lower discount depending on how that works. But 10 basis points is a good starting point and is very competitive. In terms of futures, you're getting also very, very low fees. So this is 0.02% for maker and 0.06% for taker. Again, compared to other platforms, this is about the most competitive it gets. Maker taker, I'll explain later on in the video. This is how you enter orders. Some traders pay a little bit higher fees. Some traders pay lower fees depending on how you use the order book, but I'll show you what the difference is there. Now for deposit and withdrawal, you can see here. So if I want to withdraw ETH from the platform over ETH mainnet, I worked it out to about $17. That's fairly competitive, although there are cheaper platforms out there. What usually happens is the blockchain charges you a fee to withdraw if you are withdrawing over a blockchain, but the platform can up that a little bit and make a bit of money out of you. KuCoin are doing that, and so do other platforms. It's not the cheapest out there. It's not the most expensive. For Bitcoin, I think I worked it out to be around $30 or $40 right now for withdrawing, which again is pretty high. Some other platforms are way lower, so it's definitely not the cheapest. However, if you want to withdraw some stable coins here, you can see all of the different networks that are supported, and there's a load here. You can withdraw over ETH mainnet, which is expensive. You're looking at $5 here. You can see that. If you're withdrawing over Binance Smart Chain, that's $1. If you want to use TON, that's 50 cents. Algo is $2, and you can see here. So their fees are fairly good for some assets, a little bit expensive for others, but it's around the ballpark of other exchanges and what they charge, but there are certainly cheaper ones in KuCoin. There's two main ways to buy crypto on KuCoin. If you do have fiat currency and you want to swap that into crypto on the platform, you can either set up a bank transfer or pay on card. This is going to change depending on which region that you live in. Some regions have better fiat currency on-ramps and you can just send in a payment. Some don't. So you can see these here. So I'm depositing fiat. Euros are accepted as well as these currencies right here. So if you are in one of these regions, you should be able to easily set up a bank transfer into KuCoin. And you can just go ahead, press the currency that you want to put in. I can't do this because it's not available in my region, but what they will do is give you account details to send the payment in. So they'll give you a bank account, they'll give you an IBAN or any other account number. They'll show you the bank that they're using. And what you have to do is go over to your bank and just send in a payment via the payment system. So for Euro, that would be SEPA. So you can send in a SEPA payment. and you would have to send it into the bank details. KuCoin will probably give you your account number, and you have to put that in as a payment reference, and then they can just put the assets or the money into your account. Now, the other way, if you can't do that, is to pay via a credit or debit card. So I can press this and it takes us through to the other page. What you can do here is choose much more in terms of currency, right? So let's say I want to put USD in, and I choose an amount, and I can pay on card. So Visa card, if you want to set that up with the platform, that's just like buying anything online, right? So you just put in your card details. Unfortunately for cards, the fees are way higher. So as you can see, I'm putting $100 in here, but I'm only receiving $95.50 in USDT. USDT is a US dollar stablecoin, so it should have a 1-for-1 value with the dollar. So if I'm putting $100 in on a card payment and I'm getting $95.50 back, I know that I'm actually paying 4.5% in fees to get money from my card into KuCoin. That is pretty high. It's not just KuCoin, these are card fees and everything like that. It's the same on every platform, but that's just the way it is, that you got those two options. Now, what a lot of other people do potentially as well is actually use a fiat currency on-ramp in their region and then switch into a stablecoin, send the stablecoin over to KuCoin to trade. The reason being, good fiat currency on-ramps like Coinbase, Crypto.com, they usually have higher trading fees. So what you do is on-ramp to a stablecoin and then send the stablecoin over to an exchange like KuCoin, which gives you way cheaper trading fees over time. I'll show you then how to deposit crypto onto KuCoin if you're doing that and on-ramping on a different exchange. So in your overview, go to deposit, and I want to deposit crypto, and then it's going to give me all the options. So what I want to do, let's say I've got a stablecoin on Crypto.com, and I've onboarded that, and I've onboarded into USDC. So I'm going to deposit crypto, I'm going to deposit USDC, and I've got that in my Crypto.com account. And what I want to do is select a network. So on Crypto.com, I know that I can use Optimism to send USDC out over a blockchain. So what I'm going to do is receive that on Optimism. When you're sending and receiving crypto across blockchains and across exchanges, all you have to do is make sure that where you're sending from and where you're receiving are sending the same asset on the same blockchain. Those two things, same asset, same blockchain. If either of those things is not the same, it's going to fail. So over in my Crypto.com, I've got USDC on Optimism. I'm sending it on USDC on Optimism over to KuCoin. I'm receiving USDC on Optimism right here. So I'm going to click that, and it's going to give me my address details. There it is. That's my address. So this is my deposit address. Go over to the other platform, whatever it may be, go and withdraw the assets to this address. You go in, send USDC over Optimism, this address. Now, the reason I chose Optimism is because this is a low cost blockchain. And so it's going to cost me very little to send, like $1. I can also use the Ethereum mainnet. It's just going to be more expensive. So why pay that fee to just send across exchanges? So that's how you deposit crypto into KuCoin. Now we'll look at trading crypto on the KuCoin trading system. So come up to trade, and then we want to choose spot trading. There is a convert feature here. I wouldn't recommend using this. It's very easy, but there are usually hidden fees within the trade price that you're getting. It's like going to the airport and trading at TravelX or something. So I wouldn't recommend it. We don't need to use that. We just go to the spot trading platform. So I'll click this one. And I've got some assets on the platform. I've got some stable coins. So what I can do is sell the stable coins into a crypto. So US dollar stable coin trading against a crypto asset is the way that I'm going to do it. Now from here, it may ask you to set up a trading password. This is like a PIN number that you can enter. This is an extra security step just to make sure that if someone is on your system, gets access to your system, they can't trade without this password. So I'm just going to put that in. You can see there that that has been accepted. So now you're actually allowed to go ahead and trade. It may ask you to put a trading password in before you go ahead and trade, so you can put that in. So what we have here is the real market for the assets that we want to trade. So we're in the spot market, which means that we need an asset to sell in order to buy a crypto. So I've got stable coins here. You can see the trading pair that we trade. So I'm trading with USDT, and that's a US dollar stable coin, and I can trade that against essentially any pair supported on the platform. So you can go and search for the assets that you want to trade. If I search for Bitcoin here, it's giving me all these spot pairs. So USDT, USDC, Euro. So if you're depositing euros onto the platform, you can actually just trade directly euros into the crypto that you want. So there's euro trading pairs here. Margin and futures we'll get onto in a second. If I want to trade another asset, ETH, you can see all of the trading pairs here. So again, if you've got euros, just switch that into ETH, no problem. If you've got a stable coin, you can trade them against any of the assets. So we want to choose the trading pair. I'm going to trade Bitcoin and USDT. Now I'll show you how to enter orders on the KuCoin trading system. That's on the right-hand side. Now what you can see here is available. I've got no USDT available. So what I'm going to do is press this plus button. I'm going to transfer it. It's actually in my funding account right now. That's where things go when you transfer them into the platform. I want to trade in the trading account. So I'm going to press transfer. I'm just going to transfer this amount in, and that moves it into the trading system. And now I can actually go ahead and use that to trade. If I'm buying Bitcoin, that means I'm selling the other side of the trade, which is USDT. So I need some of that in order to buy Bitcoin. Market order is when you just go ahead and buy an amount that you want, and it's going to give you the best price it can. So if I want to buy $10 of Bitcoin, right, that's going to take $10 out of my account. So buy BTC, and that will go ahead and trade, right? So simple as that. I don't choose the price that I trade or anything else. I just choose the amount that I want to buy. And so that's going to give me an amount. What it's doing is going onto the order book right here, and it's taking the best price at the current time, which is this one right here. These red orders here are sellers. They are putting their orders out there into the market, and they're saying, I've got Bitcoin to sell at this price. Because we traded a market order, we take the best order, which is this one. We take someone else's order off the book. That makes us a taker of liquidity. We took their liquidity out of the order book. We therefore pay taker trading fees. For spot, it's exactly the same as maker, but for futures, you are paying that slightly higher trading fee. But to be honest, the trading fees are so low, it doesn't really matter that much. So that's buying Bitcoin. And if we want to sell, we just go sell. You can see I've got that small amount of BTC in my account that I just bought. I want to choose the max amount to sell. That's given me, that's the amount I bought before. And I'm going to press sell BTC. That sells. And that's that. And so we've sold back into USDT. You can turn off these stupid sounds if you want as well in these settings. That will be up here in the top right-hand corner. So that's market orders. Now, a slightly more professional way to trade is limit orders. Limit orders is where we choose both the amount that we trade and the price that we trade at. So what I'm going to do is press buy BTC. I'm going to choose an amount of Bitcoin to buy, $50 worth right here. And that's going to it's going to tell me how much Bitcoin that I can trade. So $50, and I want to trade at a price of 95,000. What that should do is give me the amount of Bitcoin I can buy, because all it's doing is multiplying the amount of dollars that I'm spending by the price, and it gives me the fraction of a Bitcoin that I can buy. It knows exactly how much I want to buy because I'm telling it the price that I want to trade at. So what I'm going to do is press buy BTC. Now, I haven't actually traded right now. You can see that my order is down here. The reason being is because I have set a limit price into the system. I've said that I'm willing to buy Bitcoin, but only if the price is 95,000 or better than that. The price is currently 97,000 in the market right here, and so I can't trade. However, what I'm doing is going onto the order book, this side down here, because I'm a buyer. I'm showing my order at 95. I'm a maker of liquidity at this point because I'm showing my order and I'm not taking someone else's. I can't trade right now because the price is too expensive for me. But if the price moves down to 95,000, then I'm going to trade with a seller that will sell at 95,000. So if the price is 95, it means there's a seller willing to trade. I'm going to buy at 95. You can see my order down here. It's open. The system knows that I have it, but I can't trade right now, right? Because my price is too cheap. So what I can do on the right-hand side, you can see there, I'm just going to cancel the order, and that cancels the order out. And now the order isn't in. So I gave the order, I couldn't trade the order, and I've canceled it out, so I haven't traded anything. Now, maker fees sometimes are cheaper if you want to trade like that. And I would prefer to use limit orders because what I can do basically is come down here. So the price is 97,701. I want to put my price in at 97,000. 658 or something like that. And you'll see that the price moves around a bit and you'll probably get done. That just gives you a slightly cheaper entry into the trade. It's not a big deal, but hey, you might as well try and get a better trade if you can. So that's why most people will use limit orders most of the time. KuCoin also allows us to trade on margin, which is where we borrow money from the platform to trade in the spot market. This may not be available in every region. Some regions don't allow this. Margin is essentially borrowing from the platform, paying an interest on that money that you borrow to take positions in the spot market. So isolated or cross margin, isolated is where each individual position is margined and you borrow a certain amount of money for that position and you have collateral tied up to pay for any potential losses in that position. Each individual position is separate. Cross is where it uses all the assets in your account to margin all positions. So if one blows up, it can take your whole account with it. So most people will opt for isolated margin just to de-risk some of the individual positions. From here, we go down to available margin. I've set my leverage at 2x. This is how much you're borrowing, right? So 2x leverage. If I want a $1,000 position and I'm using 2x leverage, I put $500 down into the position to pay for any potential losses. The other $500 is borrowed from KuCoin, which I pay an interest rate on, and that makes a $1,000 position. So 2x leverage, the more leverage you use, the less money you put down. But of course, with leverage, it makes the percentage moves more volatile compared to the amount of collateral that you have. So if you've got a $100 position with $100 cash, the thing moves 10%, you make or lose $10. If you're using $100 to open a position of $1,000 in the market, a 10% move is now like a 100% move for your original capital. So a 10% move to the downside on $1,000 wipes out all your money. To the upside, you've doubled your money from what you had. So leverage is not for the faint of heart, and I can't recommend using leverage at all, but I just want to go through what margin actually is. What we want to do now is transfer some assets into our margin account. That's different from your trading account so that it doesn't wreck your other trading account. So you can see isolated margin account. I've got some money in here. Let's move some money in, right? So I can just choose the max here. So I'm going to put that into my margin account and then I can go ahead and trade. What I'm doing is borrowing money to take trades in the spot market. So I'm going to use a limit order to buy, and you can see because I'm using 2x leverage, I can open a $500 position in the market, but I'm borrowing $250 more or less, right? So I'm only using $250 of my capital and I'm opening a $500 position in the market. This margin means that price movements are much larger in relation to your underlying capital. You can make a bit more money. You can get wrecked way, way quicker as well. That's how margin works. I can't recommend it, but auto borrow and repay, what this will do is borrow when you take a position, and then when you get out of the position and sell out, it's going to auto repay the margin loans as well. Now, if your margin is getting low, which means you need some assets on there to fund any potential losses, the system won't let you go into a bad loss. So they'll just sell you out and liquidate your position if you're making losses. What you can also do is literally just put more money onto the platform to pay off the positions, pay off the borrowing, and then your margin obviously increases because you've got more cash versus the positions that you have. And in that way, you can basically just pay off the positions. But obviously, you need more money onto the platform. So that's how you use margin. You're borrowing money, paying an interest on that money to take positions in the market. Now we'll look at futures trading on KuCoin, which is completely different again. This is where you're trading a completely different product known as a futures contract. Because this is a synthetic contract, we're not actually trading crypto or anything like that. What we're doing is just trading the price of the crypto that we want to trade. So for Bitcoin, you have a Bitcoin perpetual contract. The contract goes up and down in line with the underlying Bitcoin, but we're not trading Bitcoin, we're just trading the contract. So that means we can take a long position, which benefits when the price goes up, and we can take a short position, which benefits from the price going down. So we're basically betting on the price of the asset and not actually buying and selling the asset at all. This is usually for short-term trading or hedging. And KuCoin does give decent benefits for future trading as well. You can see futures perks right here. They usually give like trading bonuses and stuff. I won't go over it now, but like I said, I'll leave the link below and you can see what's available at the time that you're watching the video. But this is essentially taking positions on the price. What do we need to know here? On the left-hand side, you have the assets that you can trade. USD margined, USDS, which is stablecoin margined. This is when you put stablecoins onto the platform to use as collateral. When you're trading contracts, you don't need to buy and sell the asset with cash. You basically just have money in your account, and that is to pay for the potential losses of positions that you take. This is why you can take leverage when you're trading, because as long as you have enough money to pay for the losses, you can trade with any amount of money that you want. It doesn't matter. The system is just going to liquidate you and take your cash to pay for any potential losses if they're getting too big. So you can put an amount on and trade with more than you have. Although again, I can't recommend that because you're just making things riskier for the most part. In any case, USD margin is when you use a stable coin like USDT as collateral. Coin margin is when you use a crypto asset as collateral. So you can put Bitcoin on to the system and use the value of that as collateral to pay for potential losses in trades. Now that's riskier because you now have a risk asset that's going up and down in value versus your trades. So potentially super risky. Let's say you put Bitcoin on the platform and go long Bitcoin. Your collateral now is Bitcoin and you're long Bitcoin. If the price goes down, your trade loses and your collateral loses value as well. So you can lose doubly as quick. So this is more risky, but there are reasons to do this. Maybe you're super bullish on the asset, or maybe you want to trade a pair. So you're putting Bitcoin on, and in a bear market, you think that an altcoin is going to go down way more than Bitcoin. And so what you're doing is using Bitcoin as collateral to trade against the altcoin, which is going down faster, taking a short position in the altcoin, and you actually make money on the pairs trade there. So that's why people would use that. Most people just use stable coins. You have $1,000 in, you know that's $1,000 worth, and you can work it out easily what the profit and loss is on your positions and how much collateral that you need. So Bitcoin perps, as you can see here, and it's pretty much the same price as Bitcoin, as it should be, because that's what you want to trade. Now, the other thing we need to know when trading futures is the funding rate. Now, this is a rate paid when trading futures. When the funding is positive, and you can see it is positive now because there's a plus there, that means that long positions pay this funding fee. The reason being is that the futures and the spot price of the asset aren't the same. They're not the same thing, right? The spot price is the real price of Bitcoin. Futures is just a contract. So the system wants to make sure that the futures price is the same as the underlying Bitcoin. If it isn't, then it becomes useless as a contract. So the way they do this is by incentivizing traders to take one side of the trade to make sure that the price is in line with the underlying. If the funding rate is positive, that means buyers are coming in, pushing the price up. And that means as a buyer, you have to pay this fee to short sellers as an incentive for them to come in and short and take the price down again. If the funding fee is negative, that means there's too many sellers forcing the price down, and you would be incentivized with this as a buyer to come in and buy. Now, this funding rate isn't really that much of a big deal for the most part. However, in bull markets, it can get pretty wild when a lot of people are speculating and going long. The funding rate can eat into the trade that you're making. So just keep this in the back of your mind and how much this is. I think it's exchanged every 8 hours or so. It changes depending on the platform, but you can see the next funding settlement is in 4 hours, and this will be exchanged. So this is done as a yearly APY, or you can see the next funding rate is 0.0077%. You can use that as you can annualize that as an APY. Usually it comes out around 8-10% for Bitcoin, but during a bull market, it can go up to 20, 25, 30% as a yearly figure. Now that means that when you're paying every 4 or 8 hours, it's going to eat into any potential wins that you're making. So just make sure you're aware of it. Again, it's not like a massive deal. If you're making profits in the trade anyway, then good, right? But you just have to make sure that that is a cost that you're aware of, and you leave some collateral in the system to make sure that you can pay for those costs. Much like margin trading, you can choose exactly how to use your margin. So as you can see here, isolated versus cross. So again, isolated, each individual position is isolated with its collateral. Cross, it uses all the collateral in the account to margin all positions. We can change the amount of leverage that we're using. Right, so anything like 10x leverage and more is absolutely insane for crypto because crypto is very volatile. If you're using 10x leverage, that means $100 in a position, making a $1,000 trade. A 10% move to the downside, you get wrecked. So it's very, very volatile on volatile assets. So use leverage less is way better, or not at all. You don't actually have to use leverage at all when trading futures, but using leverage means that you just can put less down into the trade, and so you have more money for other positions, or you have more money off the platform doing something else, earning interest in Aave, in DeFi, or just not tied up on the platform. So you can manage positions like that, and of course you can add collateral all the time to actually reduce the amount of leverage that you're taking, right? If you've got leverage, 10x leverage on $100, $1,000 position, you can just add a couple of $100 to the position. You reduce the leverage, and that means that you can let the trade run for longer if you are making a loss. You just basically pay off the trade. So what we can do here is just enter a position, and I'll show you exactly how to enter a long position and a short position. Your futures account is, again, separate from the others. So make sure you have actual assets and collateral in your futures account. So click the transfer it in from funding or trading, whatever it is, into your futures account. So you have assets here. Now, how leverage works is that we choose an amount that we trade with. So you can see the amount right here is BTC. So I'm trading 0.01 BTC and I'm going to go long. Now for 0.01 BTC, that's around $97, right? So you can work that out as a fraction of the actual, Bitcoin, right? So one unit is 97,000. We're trading 0.001. So our order cost or our order trade size is $97. But because I'm using 2x leverage, call it a $100 trade, right? $100. I'm using 2x leverage, which means that $100 trade only needs $50 of collateral, right? 50 times 2 is 100. So I'm using 2x leverage on the cost of my order, on what I'm putting down. That's the cash that I'm putting down in the trade to fund the position. And I'm trading with a $100 position. Now, what that means is that the position can fall 50% from the $100, and that wipes out my collateral. 50%, right? Because it's 2x leverage, which means the 50% is actually 2x on my initial capital, 100%. So a 50% move wipes me out to the downside. A 50% move to the upside doubles my money, the cash that I put in. So this amount BTC, 0.01, you can also do this via lot or value. So if you do value right here, you can do that as well. So let's say I put a $100 trade in. You can see it's the same thing, right? So I'm buying around 0.001 BTC and my cost is $50 right here. So I'm just gonna buy long. Now what you can do is when you enter the trade, you can use a stop loss and a take profit at the same time. This just means that you put extra orders in with your position. So I'm going long, so I'm wanting the price to go up. But what I want to do is also take this order right here, and a stop loss is where you will actually sell out of your position at a loss to prevent further losses. Because when you're taking leverage, things can get really wild, right? So what we would always do is go to the chart and pick an area where we want to take a loss at. So let's say that I'm happy to take a loss at this level right here, which would be the last support level. So I want to go long here. I think the price is, going to move upwards like this. But if it doesn't, then I want to buy long and take a loss here because it might come down to this second area and make a further loss, and I don't want to do that. So what we do is put the stop loss in at around this level, which is, let's say, 95,000, right? So what that means is I'm going long. I'm long like $100 worth. And down here, I would actually sell out and take a loss, return the capital to my account and take that loss. And that's a stop loss. You can also put a take profit in. So let's say you think the price will go up here to 100,000 again. You can put that in as a take profit. Now, what you have is set risk. Right? So you know exactly what the risk is in your position. You can take your position here. You know the downside, I have this amount of risk and I'll lose that amount. To the upside, I want to take my profit there, or just run the position. It's up to you. But with futures trading, because we're taking leverage, this is for short-term trading. So you always need an entry and a stop loss level. If you haven't got a stop loss level and you're just hoping, things can go south very quickly and you can use a lot of money. So again, I can't recommend using leverage or trading short term like this, but that's what it is. So what we'll do is enter this position like this, press confirm, order submitted, and that's in. So you can see all of these details now. Essentially what I have is this position here on the screen. So that is my position, and that is my stop up here, which is my take profit. Down here, we should have a stop loss as well, right? So you can see all that down here. I have my Bitcoin isolated. I have the amount here. I have the value of the order, which is 97.61, and you have the unrealized profit or loss right here, unrealized P&L. This means the amounts that the order is in profit or loss right now. I have not realized anything because I can trade out a portion of this position. I can trade out like 20% of the position. Let's say I'm making money. I can trade out 20% and return that 20% to my account and out of the trade. That would be a realized profit. If I'm making a loss, I can realize a small loss there as well. That would go over to the realized P&L. If it's unrealized, it means that's what's in the trade right now and changing around. So that can change over time. So what you can do is get out of the position. On the right-hand side, this says close position. So what we're going to do is choose a market order, and you can trade out, a percentage of the position. So let's say I only want to trade out half, I can do that, or I can trade out the full amount of the position, so I'll do that. and press confirm. And that should trade out the position. What it's doing is just closing the position. It also closes the profit and the take profit and stop loss that I traded as well, because those orders are no longer relevant. We can also take short positions on the price, which is where we sell first and buy back the position later. So we're selling high and buying low. So it's the same thing, but in reverse. And with futures, you can do this because we're not trading the underlying, so we don't need the underlying to sell. So I'm going to market order, 2x leverage. My position in the market's $100, and I'm going to be selling like this. I'm going to confirm. I don't have any take profit or stop loss in here, but if I did, because I'm short selling now, so I'm benefiting when the price goes down and not up. So my stop loss on this occasion would actually be higher, because if the price moves up, I'm short, and that means the price is going up. It's not good for me because I've basically sold, right? So I'm selling, hoping to buy back lower. If the price moves up, I'm in big trouble because now I'm making a loss, and the price can go to infinity. It won't go to infinity right away, but it could go to infinity. So you can make losses pretty quick here. So what we can do is enter right here down at the bottom where it says take profit stop loss. We can put our stop loss in. Remember, it has to be higher now. So 100,000, I can confirm that, and that stop loss would be in now. Order submitted, and there it is. That is my stop loss up here. Why? Because I'm short and I'm selling. So if the price rises, I'll make a loss and I can take my loss at 100K. Now, if the price goes down, I can also take my profit at 95. You can either close the position and wait for that, or you can put the take profit in here, right? So whatever that would be, right? 80,000 would be lower, whatever it is, you can put that in. So that's a short order where you actually sell first and buy back lower, and the price moving up is not good. So I'm going to market close this 100%, confirm. And that we have to cancel the order, and that will close the order for us. So that's all gone. So a long trade and a short trade. If you want to learn about more features of KuCoin or trading in general, I'll leave some helpful videos down in the description, and the KuCoin link if you want to see if there's a bonus available for you right now. I'm James, this is MazDG. Cheers for watching, and I'll see you in the next one.